Brady.
Thank you, Chairman, for calling this important meeting. I do have a statement I'd like to submit for the record. And,
We will accept that. So
the gist of the statement is to lay out the economic benefits of repealing the estate tax and the harm it does to our economy and family-owned farms and businesses, especially growing group of women and minority-owned businesses building wealth for the first time in America. We think that's a good thing. And it also lays out the need for tax reform and the fact that a recent poll, 80% of Americans believe Congress ought to act now to fix this broken tax code, and lays out sort of the principles for it. Quick question for you, Mrs. Wade, and then a tax question for the others. On the estate tax, we are told that, that this is just tax cuts for the wealthy, that your members are the Paris Hiltons of the world, the robber barons of the Teddy Roosevelt day, that this doesn't benefit average Americans. But my understanding from NFIB and other groups is that this death tax is the #1 reason family-owned farms and businesses aren't passed down to the next generation, that it is hurtful to the economy, that it harms jobs, it is the wrong tax, the wrong time, hurts the wrong people. And studies show that repealing the estate tax would actually create more revenue for the federal government than keeping it in place. And part of the damage is that the businesses use so much time, devote so much time in money to planning to survive the death tax rather than investing in their companies. So for your members, small businesses, would repealing the death tax help them spend more money and time on growing their business and jobs and less time on just doing the tax planning that they have to do today?
Certainly. We've produced a number of studies looking into succession planning for small business owners and small employers, and how they're trying to work through the estate planning phase of our members. So about 30% are looking to pass their business on to family members. And while the state tax, affects a number of them, more of them are spending resources in trying to plan for this. It's the uncertainty of where their business is headed in the future. It's the uncertainty of what thresholds the state tax will be in the future. So in our latest survey, tax survey, 34% in the last 5 years of small business owners have used capital to, or have paid for trying to plan for an estate tax. So 35%, probably many or fewer will pay the estate tax, but it's a misallocation of resources.
No, that's a good point. The claim is just very small pay for. You're saying 1 out of 3 of your members have to plan to devote resources to it. That's the impact. For the others, there's often in tax reform a trade-off between lowering rates and reducing depreciation or increasing depreciation. So my view is that corporate rates are extremely important. So is cost recovery, the ability to invest, recover those investments, reinvest it back into that is a big driver of Main Street jobs. So I wanted to ask the other witnesses today, any advice to us as we look at this issue? Is capital cost recovery equally important to rates when it comes to business growth? Mr. Reardon?
Oh, I think it's incredibly important. I know there are a couple plans out there, including one put forward by Senator Lee, to allow full expensing. And effectively shift the taxation of business income from an income-based to a consumption-based approach, which I think most economists agree is the correct way to go. It also has the benefit of being incredibly simple. I mean, you go out, you buy a piece of equipment, you write it off. You don't have to keep track of depreciation schedules. You don't have recapture. You don't have all that stuff. So it benefits on both sides. It reduces the cost of capital, and it increases simplicity.
Thank you, Mr. Reardon. Ms. Fugman?
Oh, yeah, I agree 100%. It would be very beneficial. But again, I'll stress that it's really important for 2 things. Number one, that we know what the rules will be, and that if this is some type of expensing, it's made permanent. So many of the piece of equipment that we have take months to put into service, and when we're informed the 3rd week of December what's going to be allowable, we've got a week left to purchase something over Christmas. That doesn't really work that way.
Sense at all. No, thanks for that point, Mr. Howell. Then Dr. Sullivan.
No, I would agree that estate planning is something that I used to actually consider and look at for succession to my children and all. Right now, given the medical device tax, its negative impact on this, I'm just worried about being in business in a few years.
Having an estate.
So, you know, right now, that planning has been set aside in lieu of planning on the day-to-day business.
Thanks. Dr. Sullivan, briefly, I'm out of time.
Sure. Capital expensing and bonus depreciation are very important and effective incentives for capital investment, especially for small business, because it gives them the additional benefit of cash flow. The problem is it's such a good incentive that it might be better than a rate cut. And so when you're looking at trade-offs, when you have a limited budget, it makes it very difficult to talk about lowering the rate and doing capital recovery at the same time.
Thank you, sir. Thank you again, Chairman.